So indeed, ladies and gentlemen, we will stay with the topic of technological disruption, move straight away into our second panel of the day, which is entitled, How Can Regulation Facilitate Innovation? And clearly we've heard about a lot of potential gains from Finnovation, but the risks are out there as well. A number of them have just been mentioned. So the key question is, how can regulators strike the right balance between protecting consumers and at the same time creating a facilitating and productive environment for innovation to occur? Let's please ask the panel to join us here on stage. So, Katja, I'm going to ask you to be there, please. And hello. You there, please. And Christopher, you would be here. And I'll put Monique right there. Very good. So it's a great pleasure to welcome our very international panel. And I'll start here to my left. Josep Celaya Gonzalez is the Chief Innovation Officer with the MAPFRE Group, which is the foremost insurance provider in the Spanish-speaking market and one of Europe's largest insurance groups. And you lead MAPFRE's innovation efforts, which are coordinating internal innovation processes and teams in 8 different countries. It's great to have you with us. And next to Mr. Celaya is Christopher Oster. He is Chief Executive Officer and co-founder of the Germany-based online insurance platform Clark.de. He's an entrepreneur with a focus on fintech, and he's also COO and co-founder of the lodging and hospitality platform Wimdu. So great that you can be with us as well, Christopher Oster. And next up, Director General of BEUC, Monique Royens. I hope I did that right. She represents 43 independent national consumer associations in 31 European countries. She also served on the Likanen EU high-level expert group on reforming the structure of the EU banking sector, and she's currently EU co-chair of the Transatlantic Consumer Dialogue. Great that you can be with us as well. And finally, representing our host on the panel is Katja Würz. She's head of consumer protection at EIOPA, responsible for both the conduct of business policy and oversight. And prior to joining EIOPA in 2011, she worked for more than 10 years at the ECB. So great that you are here on EIOPA's behalf. So we're going to start out this time by hearing from consumers. What does innovation insurance mean to them, in insurance mean to them? Let's take a look. Could we have the film?
What I think about insurance is hard to pick the right one. Actually looking for one right now, but I'm a bit lost.
Most people, I guess, these days are buying their insurance online, as with much of shopping these days. Of course, that also highlights the decline of the broker, who was a mediator and perhaps someone who could explain to you what the policy really meant and which policy was suitable for you. The onus is on you now as a consumer to do the research yourself.
There will be a bigger need for trust, and there will be a bigger need for more information, and maybe people should be more informed about it. And like in school, maybe they can already teach about insurance, because when I started working, I never really knew about what insurance really makes you do, where the money comes from. And I hope and I want to see that the future of insurance is growing too, and we will be more taught about it, and it's going to be more digital, of course, too.
I expect someday I have a watch which gives all the time my health status to insurance company, or I have a box in my car which gives the information how I drive, where I drive, what I'm doing, and so the algorithms about the amount I have to pay changes.
I love the way that banking has gone, so everything being through an app, through fingerprint technology. If there's a way for insurance to work in the same, I think that would be really great for it to be easily integrated into you know, your phone or your laptop into day-to-day life. I think the idea of going through call centres is quite old-fashioned now for a lot of people, and yeah, that kind of digital connection would be good for me.
Maybe an insurance company can help insure people against theft of online data, data that you put in to your computer and that goes onto the internet, and maybe gets in the hands of people that want to use it for for their own use, for their own purposes.
I think in the future you need new insurances, like for self-driving cars and, for example, drones.
I don't know. I don't have really an opinion about insurances because I don't care that much about insurance. I don't know.
So I guess that I would be right in assuming that there aren't too many people in the room who share that last point of view, but looking at what we heard from the others in that film, we heard quite a wide range, from hope and some innovative ideas there to some confusion and some worry as well. So let me now ask our panel just for an initial reading on that, and perhaps with the specific question, first of all, to you, Mr. Soleil Gonzalez, because MAPFRE says that it is seeking to be a driver of digital transformation via products designed to cater to future risks. That's language I took directly from the website. We heard a number mentioned here.
My communication team, so no raise too high the expectations.
Data theft. There was mention of drones, self-driving cars. When will we see concrete policies emerging to cover risks like this?
We are already working on that. I mean, this is something which is we are going to see all those kinds of advances integrated on existing policies beyond having new products for that. So we are facing a very interesting moment in the transformation of the whole economy, and insurance should cope with those changes. I mean, autonomous driving, for instance, is one of them. I mean, people already has the feeling that this is going to be here very soon, and it's not easy for an established insurer to provide products, specific products, to a reality that is still a promise, but we're definitely working on that, and I'm pretty sure that possibly next year we're going to see something on the market that is meant for those kind of reality.
The challenges facing incumbents will be a topic we will come back to shortly. But Monique Royens, those who were more apprehensive in the film seemed to me to be those who were perhaps older or possibly less affluent. I'm hearing Gabrielle say no. Would you say that age and or background are the main factors that influence how consumers see innovation?
Complicated question. I mean, first of all, I think that you should realize that consumers don't get up in the morning. I mean, I think you realize, saying, oh, hi, now, today I'm going to buy insurance. You know, you get up in the morning thinking, oh, I'm going to buy a smartphone, oh, I'm going to buy a car. But insurance, you buy it because you are obliged, or you need it, or they tell you need it. So it's not a hype experience. So people refrain from thinking about it. And so I think this has nothing to do with age or maybe background and education. But what the young woman said there about school, I really would advise against that. Because, I mean, you should learn a lot in school and about insurance. If you think that insurance education will help, I think it's wrong. Because you will, first of all, you will shift the responsibility of wrong choices to the consumer. And also, we have to be aware that we are in a very moving world for the moment. And I'm here in this job for quite some time, and over the last years, I learned so many notions: dynamic currency conversion, screen scraping, what do we have? Algorithms, chatbots, but drones. I mean, those were concepts that we have not been playing with, and it's very important to know that you cannot every year as a consumer have a refresher course on the new concepts that are in the market that you need to take care of. And what we really need as consumers, really fundamentally, and I have been hammering this quite since a long time, simple products. Simple insurance products with plain information that you are able to understand. It's basic. That's what people need. Now about self-driving cars, I really would like to intervene on that one, because it's not science fiction. Huh? This is coming very soon. And when you are at a grade 5 of automated driving, meaning the driver doesn't do anything, it can be your kid in the car, or in the driving experience, don't know whether it will be called a car anymore because it will be flying, then in fact you lose the concept of car insurance like it exists now. It becomes redundant because it's based on the liability of the driver. So you will move away from liability of driver insurance to product insurance, because if something goes wrong, if there is a victim, it is the fault of the system, not of the driver. Which is the driver not anymore anyway. So this means, and I know that insurance companies are fighting like hell against changing the concept, because there is a review of the Motor Insurance Directive in place, but this is how digitalization changed from outside the insurance sector. And the last point about older people, because there was an older person, but he's still younger than I am, but still, he didn't say what he thought about data sharing, whether he thinks it's good or bad. But I think the really big scare is big data. And I totally agree with what Monsieur le Gouverneur said earlier. We really need ethical behavior from the insurance companies.
So picking up on two of those points, to you, Christopher Oster, first of all, do we have reason to fear that dystopic vision of our watches and our cars sending the data directly to the insurers? That was one of the points made there in the film.
I think maybe firstly the good news is that, I mean, we had many young people also in the movie, and young people are still interested in insurance. They think it's an important topic and they want to learn about insurance, and they also want to buy insurance. So I think that's the first news that is very important and very interesting about this movie. But they also have clear expectations what it's supposed to look like. They have clear expectations on the products, and some of them were mentioned now, what the products will look like in the future. But they also have clear expectations on the service. Like what consumers simply don't understand is when they book their flights online, they order clothing online, they do all their banking online, why is that not possible in insurance? And we're talking about a virtual product, yeah, that like doesn't move any physical goods. And that's what people don't understand, why sort of they're actually not on the first place in digitization, but like a late follower, I would say. So this is something that consumers need to understand, and with that then also comes, of course, the notion of data. But maybe before we jump to data, one point regarding age groups and target group. When we founded Clark, we thought heavily about who is actually our target group. And what everyone immediately says when you talk about target group is, yeah, male, 30 to 40, maybe living in a city or so. That's a typical fintech customer. And that's simply not the right way of looking at it, especially in digitization. I mean, if I'd ask who has a smartphone here, everyone would probably raise the hand. And you don't stop using it when you grow older. So what we said in the end, actually the target group for digital insurance carriers or digital insurance brokers, as we are actually direct bank customers that already do all their banking stuff online, that already trust their financial matters to someone who's doing online first, basically. And these are the target group we look at. And they also have a very reflected view on data sharing, because if they get a benefit out of data sharing, like saving money, getting a better contract or so, then they also do it.
So a cost-benefit calculation that they're making essentially for themselves. So what about, nonetheless, that dystopic vision? Would you say that is something that we are all going to have to adjust to? It's going to happen?
I mean, it's super hard to predict, right? It feels for me sometimes like being in e-commerce in the early years, basically, or being in the travel market when players such as Booking.com emerged or Expedia. You have simply no idea where this is going. And there are so many ideas, and like it's really hard to say what of this is coming first and what are the first things. I think everyone is investing at the moment, so definitely innovation will come out. But I think on the product side, which ones will be the first, that's probably going to be decided by the consumer in the end, where they are the ones that buy in the end, so they will decide what products are going to come out first.
Thank you very much also for that very frank last answer. In other words, Katja Wurz, it's a moving target. And we heard Villeroy de Gautot talking about the difficulty of striking the right balance, for example, between segmentation, now possible with ever more data, and mutualization. So where does it leave the regulators?
Where does it leave?
Where does it leave the regulators?
Well, I think that I believe that big data means big changes, and they're definitely here to stay. We'll come back to that a little bit later. It is true that there are some challenges around what big data means in terms of the solidarity model, because if there is segmentation, if there is individually fitted both preventive services and products, then of course the risk assessments will be much more granular, and the comparability between products is of course is less obvious if it is based on your individual behavior. Now, if the solidarity model is based on indeed law of large numbers and the pooling, then of course that makes some challenges in the way that insurance will be construed going forward. That is for sure. We see a move towards, again, a lot of sort of preventive services with the health app telling you when to do sports, when to maybe take your medicine, more than actually the risk mitigation type of or coverage afterwards. So huge changes are coming around, huge changes for consumers, lots of benefits and challenges, but I think we will come back to that. In terms of how supervisors should approach it, how they should facilitate this type of innovation, I wonder whether the word facilitation is the right word. For me, it's much more about enabling, because we are not, as supervisors, the one who should be doing the innovation. This is for industry. But we should, of course, not be an impediment to the innovation. So we should facilitate it, be that via sandboxes or otherwise, have a supervisory approach that allows flexibility whilst ensuring that, of course, this is not on the back of consumers, and that still that the approaches that are taken from our side will always be with a view to allowing everybody to harness the benefits, but still making sure that there is a high level of protection for the policyholders. And of course, that financial stability is still at the core of the approaches.
Thank you very much. I'd like to now go to the audience with a question about how you see potential impediments to a good innovation environment. And our question essentially is, we've talked about the opportunities that technical innovation does give in this area, but what are the biggest impediments to realizing those opportunities? And here are your options. So first of all, technology is not yet available, not mature enough. Number 2, existing IT legacy issues prevent introduction of new solutions. Number 3, overly strict rules on data protection. Number 4, overly cumbersome insurance regulation. Number 5, lack of understanding of tools by distributors. And number 6, lack of acceptance on the part of consumers. So lots of choices. Please vote now. The opportunity is the opportunities that technological innovation can offer in general, in terms of ensuring new risks, very interesting. That, as far as I remember, conforms to last year. We also had a question last year on IT legacy issues, and the audience told us at that time that you think legacy IT is perhaps one of the biggest barriers for incumbents to adapt to the changing environment. So let me go to you, Mr. Celaya Gonzalez, and ask whether, in fact, you would say that that is the case, and if so, does that mean that regulators that enable innovation are, in a way, only helping startups and leaving the incumbents behind the curve?
Well, actually, I have to say, my impression is true. I mean, legacy IT systems are still something that is a deterrent for innovation and insurance, but it's relatively obvious. We are an industry in transformation, and we are mainly industry that manages information. So therefore, the transformation of the whole industry is pointing towards the transformation of IT systems. So that's quite obvious. Regarding regulation, yeah, I think we have to keep an eye on the fact that regulation should provide a fair play environment that obviously has, regulation has an objective, which is maintaining the stability of the system, protect customers, and so on. But in this case, we should be ensure that it provides a fair play between insurtech companies, startups, and incumbents. And this is especially important for two reasons. First of all, because on the contrary, as what happened in fintech, there were a lot of disruptors that came from the fintech startup ecosystem that started to foster innovation in the industry. And this has been fostering and been a driver of innovation in fintech for financial institutions. But in insurtech, this is not happening. Most of the insurtech disruptors are either not succeeding or focus on specific parts of the value chain of the insurance, mainly distribution. And most of the insurtech companies are focusing their attention on transforming existing incumbents. So what is happening is that incumbents are becoming sort of a platform that starts to integrate new value propositions coming from the startup ecosystem. If the purpose of regulation is to foster innovation, protect consumers, make the system stable and efficient, we should have a fair play environment, because we cannot go faster than incumbents go, because actually what's happening is that we are integrating those value propositions. And on the other hand, we are very worried about things like cyber security and cyber risk in any of the institutions that form that are part of the system. And this is as weak as the weakest chain of as the weakest link of the chain. Therefore, regulation should address that both in the startups and the incumbents.
So when is a sandbox still a fair and level playing field?
Definitely, we need that. We need that, but not for the reason of fostering innovation or being a fair play environment for anybody. We need that because I was keeping that for later on. But anyway, I think that a lot of the new innovations that can come to the insurance industry are very related with a higher degree of integration between, or at least compression between the regulator and the players in the industry. And in order to do that, we need that kind of tool. We need some boxes, we need a lot of tools that could bring that innovation to the system.
Mm-hmm. Okay, very much. Looking again at the poll that we see there, Christopher Osta, two questions that I would ask you. First of all, you've decided to start Clark, so I'm assuming you think the technology is certainly ripe enough to deliver some real benefits. Perhaps you can talk about that point. And secondly, the regulatory environment, because could we still have the graphic up, please? Can we get the graphic back on the screen, please? If I'm not wrong, I think that the second largest share was that, in fact, regulation is too cumbersome. Can we still see the table or not? Yep, great, there it is. So, am I right? 18 lack of acceptance and 16 too cumbersome regulation. Would you say that is the case?
So maybe regarding the lack of acceptance by customers, I think everyone who has a social media account cannot have big fear of data protection. That simply is the case. Or they don't know. But let's start with that assumption, basically. And if you then say what we said before, that customers need to see a value in sharing data, because on social media I see a value. I can exchange with my friends, I share data, it's okay. So they need to see a value that is in return for the data sharing. And the problem for the customer is that today this ratio is simply off in insurance. And that's why maybe this one comes out, because a big problem is for the customer if you share your data with one carrier, you most likely will not get the most bang for the buck, because like, why would this carrier basically give you the full discount that you can get with the data? So you have a need to share the data with all carriers, but if you share the data with all 550 carriers in Germany, then you're completely losing control over your data, and you have a hell lot of effort, and then the risk-return curve doesn't work anymore. So basically, for you as customer, there's simply not the right solution. I can only make this up now, but like in theory, there need to be someone independent that is really making sure that you get something out of value from your data, and then it could also work for the customer. So I think that's why this is coming out, but it's not necessarily lack of acceptance, it's lack of finding the right means to sharing the data. And regarding regulation, I cannot, I wouldn't have clicked that button. I think regarding regulation, of course the customer needs to accept what he's sharing and needs to confirm and all this, but that's sort of standard, and that makes a hell lot of sense. So I don't see a big regulatory hurdle in data sharing. So yeah, for me the biggest problem would be how to make it attractive for the consumer and get a good return out of the data. And the ripeness of the technology? You mentioned earlier this is very much an evolving field. Yes, again, that comes back to the value you get out of it. If the products are not there yet and you share a lot of data, you don't want to share the data to the carrier and say, let's see what's coming out of that. Maybe I get something in return. You really want to know what's coming out from it. And if that's not there yet and the technology is not there yet to actually show you that value, then this can be a hurdle as well. So Katja, you had a comment.
I think the results are, of course, quite interesting. I fundamentally disagree with some of the votes, surprisingly enough. I would agree, data protection, they are not too, these are not too strict rules. They are only sensible rules that goes around making sure that there is consent and there is understanding as to what you are conceding to, how your data is collected and what is being used for also going forward. So this is all makes sense. In terms of insurance regulation, is the hurdle too high? I definitely think not. We've been discussing with the industry, well, are there any impediments in existing regulation that would not facilitate or enable innovation? And the only thing that we can come up with collectively is that for instance, the Insurance Distribution Directive, the default is still paper-based. Does that fit in the 21st century? Arguably not. At least customers differ. We saw that in the film, irrespective of age, I would argue. So paper default or paper-based by default is not necessarily the best outcome. So where are the, I would actually have preferred an other in this one. We always have issues on how these questions are formulated. There's always more nuances than we can capture in a simple question. In my view, again coming back to data, and this is also something that we see when we speak to actuaries, that they say that, well, actually, these data, we have too little understanding as to what the implication of them. We don't understand, we need a lot of research involving academics, involving doctors, in terms of, well, what does these data mean? There's a lot of noise, of course, that has to be filtered, and then the data that are relevant for underwriting, this we need to understand better. So it's really a caution around making, around taking too easy conclusions around, well, that there is causality in all of the data that we see. So better research into the use of and the relevance of data, enabling a rethink of the models around underwriting that exist today. And that is, I think, one of the big challenges for the insurance industry going forward. Monique?
I just wanted to say on the question number 2 or outcome number 2, I think this is just the beauty of innovation. It's disrupting a dusty business model. So having new business models that the incumbents need to adapt to in order to remain competitive, that's what we are talking about, and that's what's good for consumers. It's the competition part and the pressure on the incumbents part that is really something that is very good for us. Now on data, of course, this is our major concern, and I also agree totally that for the moment, insurance data can be really considered very often as sensitive data. And so people do not know what is happening with the data when they are being shared. It's a black box, can I use that word? And that's really frightening. and there is no guarantee that nothing wrong happens to them, by the way. And also what we see is that insurance companies try to collect data that are not risk relevant. So why? And I do not buy that argument that is being used more and more, that you need to collect the data to enhance the customer experience. You know, this is a narrative that is more and more mainstream, and I just don't believe it. I think you can collect a limited number of data and still have a very good customer relationship. And what I also see now coming as questions by customers is, what is the cost if I want to protect my privacy? Because if you don't agree, if you can have the choice and you don't agree on sharing some of your data, how much more expensive will insurance be for you? And that is something, so while privacy is a fundamental right. So it's really important to see how this can be shaped in a customer-friendly approach.
And when you look at the breakdown here, second largest share, customer acceptance, would you say that you do see some real hesitation on the part of some customers? And if so, what is the main cause?
Well, I think that the data part is, for the moment, what we see. There has been a lot of hype around digital solutions, and what we see now, but I don't have any hard figures about that, there is some sort of a backlash, can I say that, where people ask more and more questions because we see what's happening. There has been the Uber hack. Did you see yesterday the Uber hack? There is more and more hacking, data breaches that are not being notified while there is an obligation to notify. So people get a little bit more anxious about what's happening to the data. The concept of surveillance capitalism is being used more and more. So maybe people are a little bit afraid of giving away data that they would like to have more control over.
Okay, that's a great lead into our next audience question. Could we please have the next question up on the screen? And it's a question that revolves around how willing you are to part with your data, ladies and gentlemen. So, hoping we can see this. Actually, that's not the one I want. I want the next one. Can we go back to this one later? Can we get the last question, please? It's a question about the Apple Watch, for those of you who are watching developments. Here we go. In the US, one insurer is offering an Apple Watch to their policyholders for $25. One small catch, they will need to exercise regularly and share their data. And if not, they have to pay the full price of the watch. So, very simple question. Would you take the deal? Yes or no? Please vote. Oh gosh. It's a good thing they didn't introduce it in this market. Mr. Celaya Gonzalez, what do you think? Are you surprised? And what are your considerations as an insurer on using big data? And do you think customers, consumers, ought to be more comfortable with sharing their data than what we see here?
In connection with some comments that already my colleagues have done, and if let's imagine that the question would have been, what would you do if an online platform will allow you to put all your pictures on the internet and share it with your friends for free in exchange of giving them the license to reproduce those pictures? What would you think the answer would have been? It's a rhetorical question, because it's what we're actually doing. If you go to Instagram, if you go to Facebook, so on, so on, but we are questioning that in the case of insurance. I mean, and for me, it's shocking. And we are definitely, in my vision, an industry that poses a much more fair value proposition to our customers, much more transparent, much more regulated, much more, I see Mr. Bernardino is laughing here and agrees with me, thank you. But we are not doing anything related with the internet platforms that are definitely higher challenge for our privacy and our freedom in the future, and our the fair play of the economic system. But we are not doing anything. I think definitely big data or advanced analytics plus the technology in collecting the data is a transformational force of the industry, possibly the most relevant one. And that poses a lot of challenges for us I very much agree with Mr. Villarroy's intervention and with Mr. Bernardino this morning. This is something that should be at the core of our reflection. But I think the first one, I think most of us will agree, is to explain to everybody that we are much more safe for our customers than the internet platforms, for instance.
So just playing devil's advocate, Christopher Oster, we heard Gabriel Bernardino say this morning that maybe prevention is going to become more and more a function for insurers, that insurance may move more into that arena. This is all about prevention, nothing wrong with exercising. Maybe that's the problem the audience really had with the deal. I don't know, but what do you think? Is that deal fair and legitimate?
Yeah, I see the data, or maybe I interpreted the data in a different way, because we're speaking here about something highly innovative, completely new, a new concept that is not out there in the market yet. It's something that no one has ever seen, tested, done, whatever before. And yet 30%, that's 100 million people in the United States, would say, yes, I do this. I mean, take it that way. Okay. That's actually an insane good result also. Yeah.
Early adopters, okay. Monique.
Can I reassure you, there are a lot of people trying to make the Googles and the Facebooks of this world trying to behave also with respect to the right to your image, to the right to delete your account. And
we definitely need you to have more success on that.
Yes, I mean, yes, but I mean, you cannot blame EIOPA for not intervening into that place. And second, I think that what's here at stake is what is going to happen with those data. If they are going to be shared with insurers, and then maybe it would mean that if you don't exercise regularly after 2 months, what's happening if you stop exercising? For good reasons or for bad reasons. Will your health insurance go up? Will you have a letter from your insurance company saying, we have noticed that you don't exercise as much, so we have to maybe stop the insurance, or we have to make it more expensive? What happens if you cannot exercise for good reasons, because you are a person with limited disabilities, for example, limited mobility? So do you have to pay the plain price? So in fact, what we're seeing here is that this type, maybe it won't happen, but what is the use that might be made of those type of data? If it goes into some hands, it can lead to discrimination, it can lead to personalization of insurance, and then we have the whole risk pooling aspect of insurance that is gone. And that it's only one thing, but if you cross it with different other products, you're being profiled to make it very granular, and then you are a bad risk, and then let's hope for insurance in cases when you need it.
Katja?
Just a short remark, hopefully short. I think we have to be careful not to compare the marketing of insurance with marketing of other type of products. It is a specific sector in the sense that, of course, it's built on trust and the long-term promise, or even short-term promise. So it's quite different from, selling whatever, a product in another sector. And also because, again, these are quite sensitive data. Or can be quite sensitive data, depending on what the kind of policy that you're interested in. At EIOPA, we have a very balanced approach to the use of big data. We think there are a lot of advantages. We actually think that a personalization of products can be, something which is really good and catchy, and it's great if I can get a cheaper policy. On the other side, there is the risk of exclusion based on these sensitive data. And exclusion is not necessarily that you can't get that you're a bad lifer, so you don't get your life policy, but it can be that it is an option, of course, that you're not getting it at all because of sensitive data, but it's also a possibility that it is no longer affordable to you because of your bad results. And where the results are really based on non-risk related data, like your DNA, for instance, there we have a real concern of taking them into account.
Sure, please.
Yeah, I think the mutualization is definitely one of the challenges that we should confront with this, and the use of data for exclusions and so on. And therefore, there should be provided regulation that avoids those problems. But to be honest, I think at this moment we are worried about something that has not happened. And we have products that could have point the market towards a direction. For instance, telematics in motor insurance. We have markets where the penetration of telematics is relatively high, 15% in certain places of Europe, and you don't see the mutualization there. On the contrary, the market is more inclusive. The risk mapping of the activity of risk mapping of the actuaries is much more efficient. So it has not happened. I do agree, and I was having a conversation before the panel regarding this, that intuitively it points toward that direction. But we have not seen it yet. So let's be careful about what we regulate, because maybe we are pointing on the wrong direction. And again, I think we don't have the data, for instance, to exclude a customer because, I don't know, is doing something on the weekend that we consider is too risky for, to underwrite that motor policy. For instance, but the point is, social networks have those data, and nobody is regulating that because they are not even in the insurance industry. But one day we will see how them are going to distribute insurance, and they are going to use incumbents as merely risk carriers. And the distributor is going to take into account data that comes from other sources, and the regulator will not have anything to say about that. That's definitely a challenge.
Let me take the hypothetical that you just put out there and expand on it just a bit. So use of telematics in the auto area. Apparently, there are markets where young, inexperienced drivers who install a telematics device in their cars are now able to access insurance at a lower price. Mm-hmm. So that is hardly a case of exclusion. That looks like inclusion on the basis of big data and insurtech. And Christopher Oster, what would you say if you look at the kind of possibilities that are out there now? Are the new business models about the one or the other, or is inclusion, exclusion too narrow a kind of a duality to put this in?
Maybe I had one interesting thought about the question. Maybe I can put that one out quickly. I was wondering what would happen to the survey result, or also our thinking around it, if it wouldn't say one insurer, but one gym franchise chain is offering an Apple Watch to their gym customers, but they must go and exercise regularly. Because some of the concerns that we mentioned are actually the same. What happens if those people that get the free gym access basically suddenly cannot exercise anymore? Like, some of the questions are similar. Of course, it's a completely different thing. I don't want to start a discussion, but still, like, I think sometimes we have to just be open to things. And I'm also not like the advocate of data sharing and like it's always good in any case, definitely not. I think you just have to really assess case by case if it makes sense or not, and be really cautious about it.
But in terms of the business models, two aspects.
Yeah.
First of all, is the main push here to move toward greater segmentation, greater personalization, or would you say inclusion is a consideration as well? And secondly, is monetization simply about taking that data and finding out, all the great monetary uses you can make of it that maybe have very little to do with your actual original purpose?
Extremely challenging one, because when we thought about should we do Clark or not, and is it a good idea or not, we actually said insurance is a great product. Like, I have an awesome lifestyle today, I want to protect my lifestyle, basically whatever happens. And for that, the thinking of pooling together funds and like giving to those that then have this life-changing accident basically simply makes a hell lot of sense. So we started Clark because we fundamentally believe in the concept and think it's exactly the right one. And now we're having this challenge that we see that we can make stuff better, cheaper, better experience, whatever for the customer if we have more data and we know more around the customer. But we also see the let's say, fundamental value of what we actually wanted to build a little bit at question. So it's also for us a question that we haven't answered yet perfectly well. Where is basically the cutoff point where you say, okay, now we need to draw a line and say, up to this level, sharing makes a lot of sense, and also segmentation makes a lot of sense. And I mean, it's happening already today, of course, But probably there's one level where it doesn't make sense to go to the last level of detail in the risk profiling. But where this line is not clear, but also we think as more the data-driven company that somewhere there a line makes sense.
Monique.
First of all, I would like to react to Xavier's, because he said, let's not regulate, but I would just like to say a lot of regulation already exists when it comes to personal data. It is not enforced. So just have a look at the GDPR. It's quite plain about what the consumer rights are, about the control over the data. So maybe it should just be, I mean, everybody has to be GDPR compliant by May 2018, so have a look at the regulation. Can I come to the young car driver contract? Our members have tested those pay-as-you-drive contracts, and they only are low price if you have a perfect driving behavior. Huh? I mean, you must be really very, very careful on the car. And what our members have found out is that most of the time the starting premiums are quite high. That means that in order to have all the rebates and have the low insurance premium, you really need to be totally perfect. And what they found out is that the average consumer is better off with a traditional insurance contract. And also the criteria that are being used by the insurer in order to have the rebate are not very transparent. So it's still premature to say whether that's an inclusion initiative or whether it can in fact lead to higher insurance or unaffordable insurance prices. So we have still mixed feelings about that.
Okay, thank you very much. I want to get to audience questions, so we're going to do one last quick audience question, a poll, and then get a response, and then come to you for your questions, ladies and gentlemen. Here's our third. Can we go back to the question that was the second question, but it is now the, yeah, very good, thank you. In 10 years' time, we're looking into the future here. Who will have the most success in selling consumers of the millennial generation their insurance policies? And number one, incumbents. Number two, established tech and social media companies. So is that Apple Watch essentially turning Apple into an insurer? And number three, intermediaries, including licensed startups. And number four, insure tech startups. So please vote now. Huh, okay. Disruptors, far and away the greatest share. Let me come now to the panel for quick reactions, and I have just one or two questions I'll tack on, and then I do want to open to audience questions. So, Mr. Celaya Gonzalez, a dark age coming up for the incumbents?
No, I don't think so. I think that I very much agree with the result. I think, as I mentioned before, innovation is happening in the insurtech startup environment, and established insurers are going to, become sort of a platform for including that innovation. The thing here is, yes, we have certain threats, but they don't come from the insurtech environment. I agree with the answer. They come from the internet platforms and new players that are going to be relevant as a platform in their businesses, like car manufacturers. So I don't see a dark age, but definitely the industry is gonna change how the products have been distributed until now.
So, Christopher Oster, if Amazon can be a grocery company and Google can be a car company, is your business model endangered before it's even really entirely off the ground?
I mean, 10 years is a long time frame. If you think 10 years back and what happened since then, it's really a lot that can change. I think that they will do massively good in certain areas. So when you think about Amazon selling annex insurance, for example, of course they have a superior, much faster access to the customer and will be super quick in selling annex insurance. They simply have a superior approach to the customer in this one. So yeah, that will be definitely a challenge. Or if you think about Tesla, and they have all these boxes already installed in the cars, they have superior know-how about the driving behavior of their customers. Of course, they have a competitive advantage in pricing the car insurance policy for the Tesla customers, basically. So I think in some areas, Definitely these guys will emerge and will be someone very difficult to challenge. In some other areas it will maybe be not that easy, where let's say the long, like where it's simply also not as, where it doesn't make as much sense as in these two categories for the customer to switch to any of these players.
And what are the unique characteristics that you would say InsurTech startups will have going forward in competing with any or all of those?
It's a handful of things. First, customer centricity is key. I mean, we do everything, we start by the customer. If I speak about our product, our users, I actually start my sentences, I as user do this and this. Yeah? So we completely think only about the customer. That's extremely important. Then definitely it is that we think everything in tech. So whenever we think about something, the first thing that we do is we ask ourselves, is there a tech solution for this? Or do we have to find some other way? And these are two things that are definitely good for the customer. And the last one is, I mean, what do InsurTech startups in general do differently? And that's probably something that has to do with size also, is simply the energy and passion level that you have in these companies because you're working on something new. So I think these are the three things that InsurTech startups, and maybe also the third bullet, have a little bit an advantage on. But that means you need to leverage on the customer centricity and the strong focus on digitization and tech.
Thank you. Manish Goyens, your reaction there.
Yeah, I think indeed social media companies will play a major role, maybe not in, I mean, 10 years is maybe a long distance. And what is concerning there is that they have all your data on all your life. And they are in America, they don't care about data protection. You know, normally I'm a more optimistic person, but yesterday I was at a geek workshop in London and I totally have been brainwashed about the attitude of the GAFAs of this world. So I think really there is a major threat there in terms of cross-checking your data and your life sending you in the way they want you to be. I mean, you buy what they want you to buy and you do what they want you to do. So this is something that is very scary.
So for you, this result is plausible?
I think so, yes. Because they're already now diversifying. Google has already a financial services unit. So, I mean, and maybe others also. So I mean, nothing surprising there.
Katja Wurtz, last words before we go to the audience.
Yeah, maybe just, I would say it depends. I would say that if the insurance industry get their act together, they will also be part of this development and they will continuously sell also at high rates insurances. I don't know, we don't have a glass bowl that will tell us about the future. The trends that we're seeing happening right now is indeed that there is more and more cooperation, so that let's say, and when we speak about InsurTech, it's of course both the incumbents and the startups, but we see that the startups indeed tend to have a lot of data on consumers, which is, and have a direct relationship that insurers have not always historically been very good at, or at least not regularly enough. So to join forces has proven in many cases to be a very variable business model going forward. One thing on what was said, just jumping 2 seconds back on regulation. What we are doing is I mean, the strategy is of course the risk-based, evidence-based approach. So we are not there to go out and say, you know, let's regulate for the sake of regulation because now this is new, this is hot, we want to be part of the picture. Contrary, what we are doing right now, we are launching a thematic review. We've had a series of roundtables this year on big data. We're looking into now what is the use for underwriting, for marketing, for sales. What are the potential ethical boundaries around profiling, around the more segmented or the more granular risk assessments that will be made? And the outcome of that is that we will be doing a thematic review, but on also a mapping of what the current approaches is, both in terms of regulation nationally and in supervisory approaches. And the outcome is best practices reports or approaches. So it's a much more, let's say, soft approach. It's not to regulate for the sake of regulation unless there's evidence that there's something that is not functioning and that there is detriment to the consumer as is right now. So a much more soft approach. We have a very ambitious agenda in this area. We're looking also into cyber. It was mentioned by the French governor. Cyber risk, both in terms of the underwriting opportunities that this offer, but also looking into later on, likely also certain stress scenarios and threat scenarios around this. The innovation hubs, the sandboxes, what are members doing right now nationally, and based on the best practices going forward, we will be considering whether there is a need, as part of the supervisory convergence that was discussed in the previous panel, to have a more European approach to what is done nationally in the area of innovation. So, not regulation right now, it's best practices based on evidence, and then we'll see.
Thank you very much. We'll see is a wonderful way to end that part of our discussion. We do have time for a few questions, so if you have one, please raise your hands. And okay, see a bunch over here. I'm going to go to the gentleman in the second row, please, to start with. I'm going to try to take those who haven't asked a question yet and then see how far we get. Please.
Thank you very much. My name is Nick de Maaskalk. I'm from BIPAR, the European Federation of Insurance Intermediaries, and I'm very glad to see that apparently the models that are already there still will have 56% market share in 10 years' time, which is not too bad. In particular, there is another aspect to this, and that is that I believe we should, well, we think in terms of insure hybrids, because we have an activity-based regulation in insurance, distribution and insurance activity, so everybody who is doing activity of insurance should, let's say, comply with the same rules. So that is level playing field, activity-based regulation, which I believe, I hope, will then help supervisors to make sure that everybody is supervised rightly. But are supervisors equipped already? Because we have discussions, and that's very good, but are supervisors ready today to watch what is going on if tomorrow there is the Uber of the insurance sector coming on the market? Do you have all the tools? Do you have all the resources? Do you have also the legal possibility to interfere? Thank you.
That's such a great question. I just took that out of my cards because of lack of time. But certainly, one hears more and more about the shortage of skills and competition between public and private sector. So, Katja Wurz, are you ready?
We are definitely ready. But I recognize the challenges. I mean, I often say, but it doesn't make it less true, that when we speak to the startups and all the innovative guys, they speak about 6 months as the long-term scenario. And for us as supervisors, with the governance structures that has put in place for us, I mean, this is the short-time scenario, let's be honest. It's of course true that we, because of the development, the speed of development, we need to become more agile. It is indeed an issue around being able to attract the right technical expertise and know-how. And I mean, we understand from incumbents that some of these really skillful young people, they buy them on a consultancy basis because they can't afford having them like full-time. If they can't afford having them on full-time, what will insurance do? Insurance supervisors do. This is for sure a challenge. You can also argue that, and continuing on the technical skills, if you have machines learning by themselves without human intervention, if supervisors are still human, how will they actually supervise this piece of algorithm? We're not human. I just got informed we're not human. So we can do that, we will do that, but of course there is a need to ensure that there is transparency in the way that these algorithms are programmed. So we understand what is going on, and that we ensure that there is still fair outcomes for consumers. So a lot of challenges for us as well. We have the ambitious agenda to do all of these things, but it's of course a learning curve for us as well.
Thank you very much. I had a lady in this part of the, yes, can you raise your hand high and we'll get that microphone to you. Thank you.
Claudia Lang, Community Life. So we have an online platform for life insurance, and I was following the discussion about giving data to the company to underwrite risk. And we already do that very extensively today. I think we all know that. It's very, very detailed health data, very personal. And we have one problem though. If we forget to answer a question correctly. Or the doctor perhaps put another diagnosis onto his health record that we don't know about. We have a risk of non-disclosure, and that is a major problem for anybody who takes out life insurance. And actually, I see an amazing opportunity with changing and turning the tables. Now, it's an obligation of a customer to disclose. I forget something, I lose out. I have data. If the company says, can I have access to your data, then I give you a price, and if I got it wrong, then I cannot say non-disclosure because you gave me access. And I'm just wondering, is that not also a thought that, big data has a very positive side, assuming you apply data protection rules and you use that data for the purposes of delivering a service, namely underwriting, that it can provide massive benefits to people who often don't even know what data, say, their health insurer has on them. So welcome your thoughts on that, especially from a consumer perspective.
Okay, that means Monique.
Yes. First of all, let me think about it, but I just would like to say about...
Brief,
yes,
sorry, we're really going to run out of time, so one sentence on that and then this.
On regulatory supervision, I think that it's really it would be very useful. You do not need to reinvent the wheel, but there are data protection authorities. It would be really, and I think you're already starting doing this, to work together, because they have a lot of intelligence about, like, artificial intelligence or any other data behavior. That's very important to work together and reinforce the enforcement network. On big data, I mean, I'm a little bit, it's a little bit surrealistic that you're telling me that the insurance company should know more than the customer about his health status. Do you think that that's normal?
Well, I think one of the challenges that people have is that doctors put diagnoses on their files that they don't know about. And this is a real issue.
Yes.
And so it is a problem for customers. They don't necessarily know, or they don't know that it's relevant.
Okay.
But you cannot be forced to disclose something that you are not aware of. So, I mean, this is, I think, that the benefit of what you're saying. So you're collecting data to the benefit of consumers to whom you are hiding data. This is a bit...
Okay, this might be a good one to pick up on in the break. Who else had... I think I had a question over here. Yeah, could we have one in the front row, please?
We get to speak afterwards, but we have to be really careful, what do we want to do? We want to give people cheaper insurances.
No.
Which are kind of, no, I mean, we are very privileged because we are wealthy or well off, so we don't have those needs. So therefore we have to think as regulators not to over-regulate things, and at the end we make things expensive, and the person who doesn't have money couldn't care less if his data's gone, because the only thing he cares, he wants an insurance. And so at the end, we should not reflect from our side that, intellectually we have to protect the people. They don't need protection, they need insurance, affordable insurance. And to make affordable insurance, you have to provide something in return. Do you have an answer to that?
Again, thank you very much. An inclusion argument there with data as consideration in the contract.
Is it to me? Well, I mean, this is like a very, can I say, positive picture, because the point is that there is a risk if you open up to data as a broad data collection as a factor for insurance pricing, then you can end up with higher insurance. That's the point, or exclusion. Yeah, but I mean, so in fact, if you push it to the limit, you will only insure those people who present zero risk. No, I mean, but that's, no, we hope so. I am pushing it to the limit. I'm a little bit provocative, because if you focus more and more on the good risk, and you exclude those who are bad risk for you, where is the inclusion argument there?
On inclusion, of course, I mean, again, there is always, a pro and a con, a dark side and a positive side. We also see inclusion in the sense that, like, for instance, in flooded areas, that because of their postal number the houses can't be insured, because you know that every, 10th year the river will rise. There are examples of specific houses in that postal area who are actually getting a flood insurance because, or the owners will get a flood insurance, because the specific, details of that very piece of property is insurable. So, I mean, you have both situations.
Again, risk-based relative to the exact situation. There's lots of murmuring. Clearly, we're generating all kinds of need for networking. So I would say we close the panel there with a very warm thanks to all of our panelists for their input.